And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, the whole enchilada. It's the Lance Roberts Show, presented by Clarity Financial. It's life, money, and sweat equity. Now, welcome in to the Lance Roberts Show.
And welcome to the show today. I'm your host, Lance Roberts, for this Thursday's edition of your podcast. Of course, this is the day after the big Fed rate hike yesterday. And of course, yesterday when the Fed hiked rates, they had some very interesting language with Jerome Powell in his testimony. Said basically they have removed the word accommodation. So really since 2009, we've had a Federal Reserve that is focused on providing ultra accommodative monetary policy to help boost the markets and, of course, create that wealth effect that has led to, well, basically the economic recovery we've had since 2009. Interestingly enough, today, or yesterday anyway, removing that language of accommodative so that, well, maybe this is signaling a shift towards a tighter potential monetary policy structure in the future. So that weighed on stocks yesterday. We saw a decline in stock prices yesterday. However, today, the markets actually did have a nice rebound coming off. The market's currently just getting ready to close here. We're currently up about 9 points on the S&P. But importantly, we were up much more earlier this morning and have really been selling off all afternoon. Now, a lot of this has been a very light volume day in terms of the markets, primarily because of the Kavanaugh testimony, which has been airing all day on every single channel. You could not get away from it. This has really had everybody's attention all day long, and I'm not sure why it's really all that important, but that's a story for a different day. But nonetheless, the markets have been selling off all day, so this early strength we had earlier today has been fading all afternoon. And importantly here, the reason that I bring this up is that, again, and we've talked about this numerous times here over the last several weeks. If you're watching our live stream at YouTube or livestream.com, you can actually see the charts that we're talking about. But following this breakout that we had earlier in January, and again, at the January highs, we then sold off and then rallied back. And then here in late August, we actually broke above that January high. And this, of course, got the markets very excited. We had said at that point, wait for a pullback, and we got in that retest of that breakout of the highs, which allowed us to add some equity exposure. The markets then subsequently rallied to new highs, and we've been trailing back here over the last few days. We'd gotten overbought on a short-term basis, and we'd said that probably what's going to happen here is that the markets need to pull back here, retest some level of support before they can kind of make any real advance. Well, we've had 4 days of sell-off. The market's going to pull off its first up day in 4 days in terms of the market itself, but really gave up a lot of the gains. So we're going to see here on Friday, tomorrow, whether or not this market can get a little bit of a muster and hold support here at this recent little pullback that it had and make a move higher. Again, our projections for the end of this year is a move towards 3,000 on the S&P 500 by the end of the year. But in the short term, as we've been talking about, we've got October right around the corner. Now, that tends to be a seasonally more volatile month. September, October tend to have higher volatility, lower rates of returns. So again, so far, the month of September has proved to be pretty normal. Lots of up and down action, not really making a lot of gains here. We'll see as we move into October if this market can go ahead and make a move higher. The highest odds for a market move higher is going to be November and December as we move into the end of the fiscal year. Of course, a lot of mutual funds, hedge fund managers wanting to make sure and capitalize on performance for the year. They want to own the hot stocks. So again, we'll see a rotation probably into the leadership stocks that have been occurring over the course of this year so far, which has been a lot of your FANG stocks, technology in particular, discretionary as well as financials and staples. So probably, and healthcare. We'll probably see some movement into those stocks moving into the year. Again, kind of that catch-up play. But again, watch for some volatility here over the next month, in particular as we move forward. Outside of that, one of the other couple of issues to be pointing to or paying attention to anyway, again, utilities have been one of those sectors that have taken a lot of hit lately. We talked about this yesterday. We'd likely see some rotation into utilities here over the next day. And of course, today we saw that utilities up about 1% today. Discretionary also up about 30 basis points. Healthcare stocks up 0.5% today, as well as technology stocks. All really kind of, those were the leadership sectors today. And again, where you see a lot of the action. One thing you also want to pay attention to, we're watching this closely again, is keep watching what's happening here with the 10-year Treasury rate. While there was a lot of concern here, of course, interest rates breaking back above 3%, and of course, every time we get above 3%, that's really been a point that two things happen. One, the stock market begins to underperform, as it has over the last 4 days, and you start seeing a rotation into the safety of bonds. As you see here, bonds have been picking up here over the last couple of days, and rates have been trying to come back down, so we're heading back towards that 3% level. If we stumble into next week, and of course, there's a lot of issues over tariffs and trade and what's happening there, valuations also becoming much more interesting at this point. People are starting to pay attention to this. The other side of this is we're getting the highest level of negative pre-announcements for stocks in the third quarter that we've seen since 2016. So there is some rising concern within the overall markets about where we are currently. So watch for rotation back into fixed income. This would very likely pull interest rates back below that 3% level. Upside targets on TLT run right in here between 120 and 121. So there's a decent trading opportunity for fixed income. And as we've talked about before, every time rates get above this 3% level, we've been avid buyers of bonds, particularly for that reason, because we have continued to be in this process of basing with interest rates. And the issue is really that higher interest rates are not good for the economy. And as we saw with home prices today, those have been weakening as well. So again, watch interest rates here. Those are really kind of your key driver. While the markets have been, pushing up here towards new highs, we continue to watch what's happening internationally, and what you continue to see on a global basis, weaker economic growth. That's hard to sustain here in the U.S., and as rates rise and the dollar gets stronger, those are going to be impedances to the market itself. On our website today, I actually have an article out talking about the two biggest threats to this bull market rally, which is basically tariffs and what happens to economic profits because of tariffs, and interest rates and how it affects the economy. That's on the website today, realinvestmentadvice.com. When we come back from the break, we're going to talk about price to sales and why that matters, and a little bit about a different look at valuations. We'll talk about that next, right after the break, right here on The Lance Roberts Show. Get by our YouTube channel, The Lance Roberts Show at YouTube. Subscribe there. And, of course, go to our podcast page at lancerobertsshow.com. You simply go to lancerobertsshow.com. Takes you right to our podcast page. All of the different apps available to download and listen to this podcast and watch it live right there at our website. Be right back after the break.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at lancerobertsshow.com.
A new professional version of Real Investment Advice is coming, but you can still subscribe today for free at realinvestmentadvice.com and click on the RIA Pro tab. You'll have access to Lance Roberts' proprietary stock and ETF portfolios, analysis, and all of the critical investment information you need in one place. RIA Pro. RIA Pro. The professional version of Real Investment Advice. Subscribe today for free at realinvestmentadvice.com and click on the RIA Pro tab.
Lance Roberts is back Saturday mornings at 9 on AM 700.
Investors have a very, very short-term memory of these issues, and they might like wearing Nike shoes.
Lance Roberts is back Saturday mornings at 9 on AM 700, the voice of Texas.